Welcome back to the Trading Desk. I'm Nicole, and I'm here with Matt, my co-host. And we are here to talk about your money today, your money, my money, and how are people really getting involved with trading.
Right.
I know personally, I just signed the papers for my 401k program at work, and we can select where and how we want to invest our money within that certain program.
Right.
And I know there's many other people out there who are involved with that same kind of program as well.
Right.
So how do you think most people get involved with starting out as being traders?
Well, I think there's a number of things. There's a number of questions you asked, and they're all very good questions. I would say that trading, again, we talked about this last show, is an asset class. So it should never be your entire savings program. It should be a component of it, a piece of it, if you will. So it should be that piece that you're more actively involved with. The 401k, although a lot of times, a lot of companies will allow you to trade your 401k, may not be the best vehicle for you to be learning how to trade. That being said, your 401k, you want to make sure you put your money away every pay period and you're saving it. That's really the essence of that. It's kind of a forced
Right. You don't really have to
savings.
think about it.
Exactly.
It just does its own thing.
And so within that, though, you can break up and have a nice, diverse group of 4 or 5 mutual funds or something. Maybe you've got a foreign, you've got an emerging market, a small cap, and depending again on your age, more aggressive. If you're younger, less aggressive if you're nearing retirement.
Let's say I want to actually get involved and feel like a trader.
So if
that's
you want
something on the back burner.
Right. So if you want to get involved and be a trader, I always tell people, as somebody who's done this for nearly 2 decades, stocks, unless you have probably $500,000, are probably not the best trading vehicle. If you want to trade, probably futures, commodities, and Forex are probably better trading vehicles when it comes to that.
So is there ways I can go out and practice? I mean, I've heard there's
There
online
are
simulations.
Yeah, there's definitely, and I would recommend that. And also what I would do is really educate yourself on the different exchanges. Basically, the 2 main exchanges in the U.S. for trading futures and commodities are the CME, the Chicago Mercantile Exchange, and they've got a fantastic website. If you go to CME.com, that's Charlie Mary Edward.com, and great education, a lot of programs on how to teach you how to trade and what to trade and what the nominal rates, because every vehicle on a futures, from a S&P contract to a wheat, has a different nominal. So that means a contract per point is worth something different and has different expiration dates. So you need to really educate yourself on how those work first.
And how those translate to dollars.
Correct,
As well.
and that's the nominal rate, exactly. So one S&P contract is worth $50 every point it moves. So you need to know that, so when you're getting involved in the marketplace.
So you can lose a lot of money really
You
fast.
can lose it fast, but you also need to really containerize and contextualize that risk, define how much you're willing to risk on a trade in your trading account only.
And you were saying earlier, at least you need to specify how much are you willing to risk,
Right.
as opposed to how much you're actually willing to make.
Correct. I think people always think, I want to make $1,000 a day. Well, that's great. Maybe if you have $100,000 a day, you have to start with. But where are you starting? If you're starting with a $10,000 account, you're definitely not going to be able to do much with stocks. But with futures, a $10,000 account can control one contract, and one contract moving 1 point is $50. So, and the cost to do that transaction is much cheaper than it is in the stock world. And there's tax consequences, which you should ask your CPA about, trading futures versus stocks. And you actually keep more money legally by trading futures, commodities, and Forex. So those are all benefits of having a trading account in those areas.
Now, speaking of buzzwords that are kind of out there right now, you mentioned contango earlier.
Yeah, contango. A lot of people were talking about it back in '08 when oil was going to $150 a barrel. And basically what contango means is the speculative price of the future, or of the commodity, oil in this case, was higher than the physical, what it took to buy a barrel of oil. So although oil was trading at $150, you could still get gas at $4 a gallon at the tank.
And you were saying that means that something out there is not right.
Something was not
One
right.
side of the
One side or the
transaction.
other. We didn't know which side was right or wrong, but we did find out later that oil, when it went from $150 a barrel back to $30, obviously there was something wrong with the speculative price. So there was too many people chasing the price on the speculative side of things versus what was the true ownership.
So as
of
long
the
as you know
market.
that that's happening, is there a way that you can benefit?
There's definitely ways you can benefit off that volatility.
So you just need to learn to recognize when
Exactly,
that's going on.
exactly. And we'll talk more about that in future shows. When we come back to the Trading Desk, I did an interview with Carly Garner, who wrote a book, How to Trade Commodities. It's a fantastic read. I highly recommend you go out and read it. Only came out in the last 3 months. And she's a veteran commodities and futures broker out of Las Vegas. You're watching the Trading Desk on COTV Channel 11.